Hey everyone, how's it going? It is 1 o'clock Pacific on November 6th. Yes, November 6th, which means that I just noticed my ticker bar is not working. I'll have to get that fixed. Well, it's the market just closed and it was kind of not that exciting today. After all the excitement that we had last week, today was really kind of muted and really kind of quiet. So the market's taken a break after all that huge movement. And let's take a look how that developed today. So in the S&P 500, the first thing I want to note is how little volume we had throughout the entire day. Even at the beginning, you can see that it's not that much higher than throughout the middle of the day. And at the end of the day, in the last hour, it's really not that much bigger than the middle of the day either. It's pretty much matching the beginning of the day. We got that initial spike that first minute, and the last minute spikes the last couple minutes, where we had this huge surge right here. We'll talk about that in just a moment. But compare that to this, where these are much higher in the beginning. Then we get the muted range, which is similar but still higher than what we got in the volume over here, and then much higher range towards the end. So overall, there was very little market activity by institutions, whether it was at the open or at the end. So they're really just taking a break, taking a breather, and waiting to see how this week develops, which is basically what we said we were going to do this morning pre-market. So we have not gotten a lot more information out of today's session to help us plan for the next week and into the end of the year, but we did get some information. We'll talk about that in a little bit as well. So the market, we said, hey, we want to be very careful. We want to watch this green range right here and see what happens. And if we break out of the range, we want to make sure that there's momentum and or volume in that breakout of the range before we decide that it's going to be directional. Because remember, these levels are not super precise. They are regions, and we just draw a single line within the region where we expect things to move. So just because it moves past a line that we draw, we're not going to get too excited. We need to confirm that it moves beyond the region that the supply or the demand actually exists. So when we came out down here, there wasn't a lot of volume. There weren't huge bars right here, so it was nothing to get excited about, and we just traded in this range that we identified in the morning, mostly in the lower half. The fact that we traded mostly in the lower half was a clue that we're kind of biased towards the downside for today, and we did get that breakout to the downside. And then when we moved a little bit further away from this green line right here, and then bounced back to the green, and then it got rejected and started coming down with this large bar, that was the first clue that we might start getting a little bit direction through the day. And then at 10:11, I sent out a telegram indicating that there was a chance that we're going to head lower. So I said very slow, starting to break below the range we identified. Looks like a slow, steady move lower is developing, and because we got larger volume spikes on the move down than on the bounces back up, it was an indication that we might start grinding lower today. Well, we didn't grind lower. We moved quite a bit. We went parabolically lower, but not that far, not super far down. So this was the first clue right here, where we had that larger than usual volume bar. Now it's harder to tell because we had that huge volume right here. It's harder to tell, but before that development, actually, let's go back to a replay and see. There we go. All right, now we'll be able to see. Okay, you can see we have that large red volume bar, large red volume bar, large red volume bar, only one large green volume bar, but that was on a small candle. So that overall, this bearishness was developing inside the markets. And when we hit this large volume bar again, that's when I sent out that message on Telegram that, hey, it looks like we've got some bearish bias. We could be moving lower. My feeling was that we'd be grinding lower, and I did not expect that we went lower as quickly as we did. But then, of course, if you had gone short, then the faster movement creates faster profit and bigger profit. So it wasn't a huge move, though. It wasn't by any means a really big move. So I mean, even if you were day trading this and this was the only day trade you got throughout the day, you probably weren't too happy, right? You probably didn't make your daily goal. So it was very, 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 very quiet during the day. And then what happened here is you can see that it recovered a little bit, came back down, it formed this W bottom right here, which is an indicator that we can move higher. We consolidated for most of the time during the end, and then we got that last minute surge upwards. So institutions finally coming in, finally bidding it up, and then together with this W bottom, that is giving us a little bit of an indication of a upward bias. So we won't be too surprised tomorrow morning if we wake up and futures are flat and random, or if they have a slight upward bias to them. Of course, that could change overnight in the European and Asian markets, but from what we're seeing right now, and of course the US markets are the major driver for the US stock market. So right now the momentum and the way this went upwards at the surge at the end, institutions trying to put their money and get to work and get into position for tomorrow, that is giving us indication that we could move opening higher tomorrow. So like I said, not a huge amount of price movement in the market today, but we do get tiny little clues of what's happening. And we didn't come down to our MA50, we didn't come down to that green level right here, closing the gap, that first gap that we were talking about. So overall, we have a slight bullish bias because of that. And then if we look on a daily basis, what we see is that we got a green bar. It didn't look like we were going to get a green bar for most of the day, but we ended up getting a green bar, and barely a green bar. This is basically a doji indecision bar. But two interesting things about this bar that I'm going to point out. First one is that the low is completely above that MA50. That is a super positive sign. If we get another one like that tomorrow, we're going to be golden. We're going to be very much more optimistic that we're going to head higher. The other thing is, other than the fact that it's green bar, we're slightly, that makes us a little bit happy, but doesn't really change the probabilities too much. But you see how this high is lower than this high, and this low is higher than this low? We have gotten what we call an inside day bar, meaning that the trading range, is perfectly encompassed by the previous day. Now, if it happens again tomorrow, that is going to start indicating to us that potential and pressure is starting to build up. The more I compress inside this tight range, the more likely I am going to get an explosive move out of that range. And right now, the bias is pointing towards up. So if I get another one of these, that's going to be enough energy to surge upwards. If I get a third one of these, that's going to be a lot more energy. The longer it goes on, 4, 5, 6, 7, 8, 9, 10, then the more energy it builds up and the more explosive the move becomes. Now, I'm not too excited about just a single day, but after 2 days, it could get a little exciting. After 3 days, it gets really exciting. And the further beyond that we get, the more exciting it gets. But of course, it could explode to the downside against the bias that we currently have. So we need to be a little bit careful with that as well. But right now, it's looking like that pressure is building up inside the markets. Institutions have been mostly quiet today. They're keeping their powder dry, just waiting to put it to work. And once the institutions decide that they're going to start putting money to work and which direction they're going to put it in, then that is going to be a very large surge. And right now it's pointing towards upwards. And if that happens, then we can start to more safely say that we've bounced, we've changed the direction of this trend, and we're going to start heading higher. Okay? Let's take a look at what sectors got attention today. And we'll finish it up there because we didn't get a whole lot of information today. So, it doesn't make a lot of sense to try to draw in from all these sources and try to paint a bigger picture. We've got the picture that we formed over the weekend and this morning. We've got information to continue to support that viewpoint, and we just need to wait for the market to actually move in a direction. So today, we got movement into healthcare and then XLK, which is what I expected as a strong sector, but then we also got movement into XLP, which is what I expected for a weak sector. But take a look at the changes though. They're not that much. They're baby amounts. So XLK 0.37%, XLV 0.54%, XLP 0.22%. And then it's looking like all these other sectors, for the most part, have gotten downward movement, and especially down here, we're seeing 1 point something percent, about 2% in real estate. So is money starting to move out? Are we starting to compress into these very polar tech and opposites sectors, tech and consumer staples? Or what is this indicating for us right here? So what I'm seeing is money moving out of gold, which means putting it to work into growth or into risk, but then we're also leaving retail, and we're also leaving small cap stocks. So that's a little interesting, right? This is really contradictory. So it's hard to draw the conclusion, but if we let's take a look at how it actually looks on a chart rather than just simple percentages. So if I look at IWM, okay, so it bounced off of that MA50 pretty hard, but we not really did any work to fill the gap. I guess that low can be considered as almost filling the gap and then coming out of it. That's pretty good news, actually. Do we expect this to fall apart? No. Could it drift lower? Yes. So right now what we're looking at in IWM is actually looking like we're probably going to pull back into that EMA 80 or 20, and then we'll see what happens from there. But my feeling based on the overall markets and the fact that we are expecting an upward bias is that we could probably bounce off of that EMA 20. So overall, looking really good. And actually, if that bias is strong enough, if we believe in that bias strong enough, or if we would just want to put a baby amount of capital to work, then what we would do is we start looking for opportunities in small cap stocks. And I wouldn't do it right now. I wouldn't do it at tomorrow's open, but I would wait for this to come down and come to the top of this bar or the EMA 20, which is pretty much the same level. And once I saw that, I would be putting capital to work. And not huge allocations. And you can bet that institutions are probably thinking the same thing. Once I get a pullback, things get a little bit juicier, there's a little bit more profit in everything, options get cheaper. Then because implied volatility will go down when prices move down. So implied volatility jumped up like crazy. You can bet these last 2 days, because of these gap ups and these huge moves upwards, those are sudden and caught everyone by surprise. And so market makers are going to widen out their spreads, and they're going to increase the implied volatility that's priced into the options. And so now that we're moving downwards, if we move strongly downwards again, those implied volatilities are going to collapse. Prices on those options are going to shrink, and that makes really great opportunities for buying options. So I'd be looking for some opportunities right there. Small cap stocks, if we get a pullback into that EMA 80 or the top of this bar right here, I really be looking for some nice small allocation, small cap stocks to be going into. Okay, so that's pretty much going to cover it today. We didn't really have a lot of day trading action. We were really mostly focused on the S&P 500, and it didn't really go anywhere, sort of like we expected. And so we'll be looking till tomorrow, and tomorrow could end up being not really going anywhere. And if that happens, then we're going to look for big movements. Starting from Wednesday, we will be looking for potentially, if we get that inside day again tomorrow, on Wednesday, Thursday, Friday, we're going to be alert for big movements or start to position ourselves for potential large movements in the market. So what that means for us is it's a really great time to trade. because you have a bias movement, so that bias would be upwards, even if it's a small bias, even if it's 60% bias versus 40% downward, then what what you get is for that little bit higher probability, you get much better reward to risk ratios. Because if I get an explosive move upward versus a explosive move downwards, my potential gain at that point, because we have this compressed region of lowering implied volatility, lower range means lower implied volatility. Once that spikes upwards, the implied volatility spikes upwards, my option can gain in price really, really quickly. Whereas my value inside an option, as long as I'm not buying way out of the money and I'm not buying way expensive or overpriced options, it can't fall nearly as fast as those prices can explode upwards. So it's an exciting time. It's an exciting time to start to position yourselves in the market. And so tomorrow, if we get another inside day, then what we'll be doing is we'll be looking for those small cap stock opportunities as example trades. Okay, so that's going to be it for today. Hopefully, if we get a quiet, boring day tomorrow, then we'll probably get an exciting rest of the week. All right, I will see you tomorrow in the pre-market, and we'll see how everything develops. All right, see you guys.